Hello and welcome to today's new episode and wish all of you a very happy and colorful Holi today. Today market is closed on account of Holi, and you can understand why I have come with this particular video. That is due to the war. Uh, Today is the fourth day of the Middle East crisis, Middle East war, and today our topic of discussion will be the war. How this war is impacting our country, our market, our economy, as well as how this may continue in coming days. So that will be our area of discussion in this particular video. So without wasting time, please start into the context and stay tuned till the end. So, a few things we need to understand. I'm closely tracking the news and hope you all are getting updates from various news channels. What is going on? What is happening these days? The first concern for the market is crude. Uh, See, there is no direct impact of the Iran war in India, but the concern remains the crude. Why crude? Because all of you know, uh, uh, lots of like crude producing countries in the Middle East are getting affected. Rather, almost 15 countries are now getting affected in the war. In terms of size, many people are saying that this is a world, but still, I believe it's not a world war. It may be a phase one. In one particular channel, it was saying it is phase one of world war. So maybe it can be a phase one of world war. The point of worry if bigger uh, powers get in. Only US is the big power in this particular war, but if other big powers get involved, that then it can turn into world war. But before that, uh, I don't consider it as a world war. Anyways, uh, the concern remains on crude. And why crude is a big point of concern for India? Because 90% of our uh, crude consumption is dependent on import. And uh, after latest US deal with India, India has is gradually reducing in import from Russia and increasing the, or let's say, compensating that fall of crude consumption from uh, Russia. Rather, let me put it in this way: the whatever the additional crude is required for India is coming from Saudi. So Saudi is going to be the next big partner of India for you know supplying crude. In this backdrop, when crude prices rises, 90% of crude is imported, then it becomes a very big concern. Crude Brent crossed $72 per barrel and sorry, WTI crossed $72 per barrel and Brent touched almost 80 yesterday afternoon. I have last seen. Afterwards, obviously, there is movement. And as our larger chunk of import is crude, and our crude import, 90% of our crude import is, uh, sorry, 90% of our crude requirement is import. So, increase in crude prices puts pressure on our economy. It is said that $1 of rise in crude prices impacts 13,000 crore on our import bill. So obviously this rise in crude prices is a big concern, especially when it crosses 72. 72 is I would say it's a benchmark or a very important point. So once it starts moving above 72, it will have very big impact on Indian economy. We have seen lots of resilience. Our business, which are not exposed to outside the country, which are absolutely domestic focused, were like somehow shield from various global factors we have seen earlier. Our country has shown resilience up to a certain extent earlier. But now the concern is very different. It's not like Ukraine-Russia war. It's not like any other tensions. It's all about rising crude prices. Middle East crisis impacts the crude directly. And it's not only crude, also our natural gas, which is LNG, which is transported from Qatar. Now we are into a deal with Qatar for supplying, or let's say for getting uh, natural gas LNG. Now, in fact, the biggest gas extractor, or let's say my gas company in Qatar, has stopped their operation as per the today's news. So obviously there will be a disruption in gas supply to India. And as far as crude is concerned, our 54% of the last imported crude were taking the route of Strait of Hormuz that has been closed due to the war. Uh, this is a concern because there is no other route to get the oil or get the crude, avoiding that Strait of Hormuz. And whatever you do, let's say some people are saying, like, will it impact, like, will India start again taking crude from Russia, increase its import from Russia? That may be possible. To avoid disruption of supply, that is highly possible that India switch to Russia. But will it save India from its crude import bill? No, not at all, because rising crude prices means if you are purchasing from Russia, then also Russian crudes from Russia also will be costlier. What it can do, like what benefit we can get, like Russia may some may allow some discount. That is a different thing altogether. But earlier it was $60. Now it's the discount will be on 50 on $80, and it may keep on rising as well uh, based on the war scenario. Strait of Hormuz is closed. There are some incidences of hitting oil tanker by Iranian missile and drone. So it's not a very favorable situation at all. Now the question is, if crude becomes a concern for India, uh, and also, why crude becomes a concern for India? Only the import bill. What would be the impact of getting those crude, like increase in the import bill? Obviously, everything will be hurt. Everything will be hurt. Rising crude prices means your consumption cost will be higher. Your fuel cost will be higher. It will impact the margin of all the companies as well. It will impact the household financials as well. Your logistics cost will be higher, and prices of all the commodities will go up, inflation will go up. So obviously, it is having a ripple effect on the economy. That is something we need to understand. Now, the question is, uh, what is the respite? No, I don't think there is any respite. The only respite is Caesar, this war to be stopped. That is one respite the whole world, not only India, whole world can get. So, but it does not mean that allowing something or accepting something which is not normal, that is not a solution. That is a temporary solution. So, a permanent solution is required. So, what is India's stand? We know that we are very much neutral in this particular war. So neither we are supporting Iran nor we are directly supporting Israel or US. But obviously, India has greater ties with Israel. We have defense ties with Israel, and we have a long-standing relation with Israel, as Israel stood with us in every war. And Iran never stood with India. Never stood means, especially after this radicalist Islamist group started ruling Iran, India, like they never supported India. They were always against us. They made lots of comments, supported Pakistan in the during Operation Sindoor. They again like uh, Ali Khamenei also made statement during Operation Sindoor. He had stand against Article 370. So obviously, this particular group, radicalist Islamist ruling this rulers, I would say autocratic rulers, they never stood with India. They are against humanity. So that is a different topic altogether. Our stand is neutral in this particular war. That is very important, but we are still getting affected directly, not directly, but indirectly. Now, question is how far means how far the war can go, or where market, what would be the impact on the market? We have already seen a significant drop in the market, significant fall in the indices and or in the overall market in last few days. Now the question is how much fall can be, how far Nifty can go. Can it go surpass? Can it go beyond 24,000? Can it go beyond 23,000? Very difficult to guess at this point in time. Levels will keep on coming, keep on going based on the war and its intensity. War is now people. I got lots of call in since yesterday. At least 5 6 calls. People started asking me, uh, "Is it good time to invest? Is it good time to put more money in the market?" The question answer is very difficult to take a call at this point in time because we don't know where the bottom is going to be. If we consider maybe another for 500, 600, 800 points downside is left, yes, we can start averaging the market, considering keeping some room to average downside. So we are speaking about Nifty 24,000, 23,000. But who knows, Nifty may go to 20,000. Who knows, Nifty may even break 20,000 and go to 18,000. It completely depends on the intensity of the work. It's very difficult to take a call today. So I would prefer uh, if if we purchase at 24,000, market goes to 23,000 and again comes back to 24,000, stating that war has ended. Then that would be a comfortable scenario, taking position at 24,000 Nifty while reverting back rather than 24,000 Nifty when it is going down. Hope you understand what I mean to say. Let me repeat it. A falling market, 24,000 is not that comfortable scenario to enter rather than hitting 23,000 and reverting back to 24,000 can be a better scenario to enter. This is my take. Question is how far Nifty can go. It can be, as I said, 23,000, 22,000. No one knows. If we consider, okay, 24,000, it looks cheaper. If we enter and market starts further falling 23,000, 22,000, then it will be, then 24,000 would look costlier. Correct? Uh, we don't know. We never know when the market is going to rebound, when the war is going to stop. But yes, this there is a strong correlation between war and the market at this point in time. US has means Donald Trump had made a comment a few days back that the war may continue for another 4 weeks. Now the question is, uh, probably he had some assessment on that basis. He said, like, based on whatever the weapon, the reserves Iran may have, based on that assessment, he must have made the comment. But it's very difficult to say the current dynamics, the current scenario. It's very difficult to say the dynamics, which word the entire scenario will turn into. If Russia steps in, if China steps in, we cannot eliminate at this point in time any indirect or direct help of Iran by those countries. Then, in case if it happens, then scenario will be completely different. Uh, if NATO steps in, because few UK air bases has been destroyed by uh, uh, Iran. Now the question is how far, how long NATO will keep itself silent. If it remains silent and if Iran keeps on pondering with like this US base, UK bases along with US, then how long NATO will remain silent? That is a question. If NATO steps in, what would be Russia's stand? As long NATO does not step in, still there is a chance of Russia to stay out of the war. There is a chance of China not to enter the war, at least directly. But if NATO steps in, then scenario can be dangerous. Russia may step in and it can turn into a world war. In case of like we cannot eliminate at this particular stage, but in case everyone comes in to join the war, then 24,000 Nifty, 23,000 Nifty, 22,000 Nifty, we never know. It can be even lower, it can be even lower. 18,000, 19,000, no one knows. So 24,000. Now, if war suddenly stops, then yes, it will be, you will feel it was a very big opportunity. But I feel keeping a close eye, waiting a little bit for getting the bottom because no one will be able to capture the bottom. So eventually it happens. So it's very difficult to take a call that a particular level, this particular level will be the bottom. So without doing hurry, uh, it's good to wait little bit, let the war to stop, and afterwards a V-shaped recovery is expected if the war does not go in the like World War format. Involving lots of superpower. But if superpower gets involved, if the war turns into nuclear war, then what will happen again? That will be a different call altogether. Very difficult to say anything on the making comment at this point in time because it will be a wild case. No one knows what will exactly. So I will say, uh, currently, stance must be cautious, keeping a close eye. And one another question: what will I do with my portfolio? What should I do with my portfolio? Because we know that it's bleeding. No doubt, it's bleeding. There may be one, two exceptions, but it's bleeding. And uh, should you come out of it? Again, I don't know what I would say. I do not have any take on this because if you book the loss, mm, then two things that you have to understand. It based on your psychology. If you book the loss and gets into the market after a few days, once you would get assurance that market will uh, that war has stopped and market is getting rebounded, then it will be a different call. But you have to have that guts that I will book this loss. That is one point. Another point, uh, like you are holding it, expecting some V-shaped recovery post uh, the war. Now, war intensity we don't know. If you stay invested and afterwards a big fall happens, then uh, revival also will not be that easy, that long. But yes, every time we have seen in the history market fail, we have seen 2007 crisis, Lehman Brothers crisis, subprime crisis. Afterwards, everything became history. So with a longer time frame, the impact can be minimized, the impact can be absorbed, impact can be avoided. From as far as new entries point of view, again, I would say averaging small amount, keeping larger room for downside will be a better approach. Along with that, what you can do, like you are averaging out in between suddenly worst stops, then you can put rest once you would get a confirmation that war has stopped and there is no risk of further escalation. Then obviously you will not get, you will be getting some 2, 3, 5% higher. Still, it will be cheaper than the top. So that is my take. Uh, Exit or booking loss is not the matter of, it is all a matter of guts. Matlab, whether a person be able to absorb loss, it's a very difficult thing to absorb, difficult thing to accept. But it's market. Two options. Once you book the loss in your book, it will be recorded as loss, or you absorb it for the time being, avoiding taking further position. Keep a close eye, and once market would rebound, you will find gradually over the period of time your portfolio will be increased. So, two options in front of you. It will be absolutely your call what you will do. Because again, we can't say suddenly tomorrow the work can stop, and suddenly that's and it may be stopped in 4 weeks. It may not be stopped for a few months. It can war can remain confined within Iran, US, and Israel, impacting immediate neighbors, and it can even go uh, spread into Europe as well. NATO may get involved. Russia, China may get involved. We don't know what exactly it may happen if everyone gets involved. The war may turn into nuclear war because some of the countries are nuclear capable countries we know, and uh, like Russia, China, these countries also may supply nuclear warheads to countries like Iran. That possibility also cannot be eliminated. So, difficult to take a call, but it's not just one word taking a call. It will be based on assessment, your own judgment, your own risk appetite, your own position, economic condition, everything. So, keeping all these particular issues, all these factors, we have to take a call. Very tough one, but yes, we have to take this call based on our assessment, our understanding, our risk appetite, and what would suit us. That's it in this particular video. Stay safe, and don't forget to subscribe my channel for getting analytical videos. Thank you so much.